FinTech players are becoming an increasingly important part of the fabric of Africa's financial services industry, transforming the industry so that it meets the needs of the underserved markets. Joining me in studio now to take a closer look at the developing landscape, Dominique Collett, who's the head of AlphaCode and Angus Brown, founder of Banking Acumen. Welcome to you both, and thanks so much for joining me in studio this afternoon. And Dominique, let's perhaps start off with you. What role do you see FinTech playing on the continent?
Sure. So, I think when we talk about FinTech, really what it is how is technology shaping financial services? And I really think what we look at there is we look at how is technology shaping it, how is social media shaping it, and how is this millennial generation consuming financial services differently. And for me, the most exciting part about technology and financial services is how it's making it easier, cheaper, and more transparent for people to access financial services. So it lowers costs, it makes it easier to understand, and it also democratizes financial services. So I think in the African context, that's really important because so many people are underserved, so many people are confused by what financial services are, and that's the exciting role of FinTech.
That's what we're looking at, Angus. I came across an article today stating that FinTech in Africa remains the most financially supported area of tech startup activity on the continent. Do you get that sense that people are looking at that investment potential and the investment case being put on the table as aggressively as that?
Yes, I think it is clear that there is lots of investment going into FinTech. Africa is seen as a continent that has a lot of potential, a lot of growth, a lot of opportunities, and therefore people are putting money into FinTech. Many people in Africa are not well served by financial services in general, so there is that opportunity inside there. So yes, it is a growth area. Yes, there is money flowing in. It could be done better. It could be done on a more structured basis. There are more entrepreneurs who could get funding better.
Absolutely. Let's put a figure to that, because the Disrupt Africa African Tech Startups Funding Report for 2016 found that FinTechs received a combined $31.4 million in investment. Let's put that number into perspective, because it's really hard to gauge, whether that is substantial enough for an industry like this.
Well, if you put that down into the number of people looking for money, clearly that isn't enough. But is investment the key criteria? Is that the measurement that we should hold for this? Yes, it's necessary. One of the key ingredients for being able to start a business is startup capital. But I think it's also a very human thing. And even that, the right person does attract the right money to follow them as well. So I think we must look at the right ingredients being people with the knowledge, the skills, the talent, the passion, the expertise to be able to get out there, start a business, and then get the funding and the partners to be able to take that business further.
Yeah. So Dominique, access to funding aside, banks, for example, are looking to develop new technologies themselves in-house. So the service seems to be spinning off established organizations already. How much of a hindrance is that to startup activity in this space?
So I think the thing is, technology has always been one of the biggest components of financial services. It's probably always been the most technologically advanced industry, I think, along with things, for example, health sciences. So technology has always been there in financial services. I think what we're just seeing now is a wave of technology which is changing the way financial services are consumed. And banks and insurers have always spent billions on technology. I think this wave of activity is around smaller tech firms being able to do things that banks and insurers haven't been able to do historically. Yeah. So I think that's what's quite exciting. You're seeing these small lean teams that are doing things in weeks and in months that have previously taken banks and insurers years to do. And I think that's where the paradigm shift is coming. And I think that's the thing that the incumbent players are struggling with slightly, because they've got very large technology teams, they've got a lot of legacy issues that they've got to deal with, they've got very large existing customer bases, and they sit with a lot of risk mitigation that they've got to deal with. And here you've got these young, new, aggressive players who are thinking about things fundamentally differently, who are using new technologies, who are au fait with cloud hosting, who are au fait with APIs, and they're just doing things really quickly. So the incumbents are struggling. because they don't know how to consume these new services. They don't know how to work with these young, agile teams. And we've seen a lot of different models. We've seen banks try to start their own technology shops in-house. We've seen them try to partner with businesses. We've seen them try to buy these businesses. And I don't think we've seen the perfect model as yet.
Yeah. Are we seeing enough collaboration? Because Dominique talks about this paradigm shift, but are we seeing collaboration between established players and startups where scaling operations, one assumes, is imperative to success?
Absolutely critical. Unless you have a truly magical product, it's really hard to be able to get into the market yourself as a startup. There are very few examples of that. Often you find that a startup business will come up with good ideas, be able to build something fast, then partner with an established partner to get into the market, to get traction, to get customers. And sometimes they come in as a service provider. So I think startup businesses must consider whether they are a service provider and will work with existing firms, or whether they will strike out on their own to establish new markets.
Yeah.
And that's also where I agree very much with Dom, that a lot of these organizations struggle with how to deal with fintechs. And that, to me, is often the recipe for the winners and the losers, is going to be how are they able to bring these fintech firms into the organization and work with them. That will distinguish the winners from the losers.
And idea is one thing, but also timelines when it comes to return on investment. I mean, that's a very big incentive for any investor looking to plow capital into an initiative like this. Are we looking at extensive timelines on that front?
I think that is the thing. I mean, certainly from an AlphaCode and from an RMI perspective, when we look at a business, we don't just assess the tech. What we're really looking is the fundamental business model. And most importantly, we're looking at the team. Because I think what people forget is that you can have a phenomenal product and you can have a phenomenal technology, but technology in and of itself isn't going to change the way people bank or the way that people insure. It's really about, do you have the correct business model? Do you have distribution? Do you have the right team that can execute on it? And I think that's something that the startups and the fintechs in this space also have to spend a lot of time thinking about it. Because you can have a great bunch of techies developing the most amazing software in the back office, but if you don't have a very strong business team who can actually take it out there and drive it into the hands of the consumers, you don't have a business either. So the one thing about the financial services space is that the J-curves are often a lot deeper. You do have a lot more regulatory barriers that you have to go through, and that's a very important part of the fintech space, is navigating that the regulatory landscape, which is obviously becoming more and more complex. And you often have to have industry expertise so that you can really understand, because at the end of the day, you're dealing with people's money. And you can't be glib about it. It's not, for example, a tech business where you're launching a website. You are dealing with people's livelihoods. You're dealing with their savings. You're dealing with insuring their homes and their cars, and you're dealing with their money. So it is a tricky thing that you have to balance.
Yeah. Angus, Dominique alluding to it there, slightly, but what are some of the challenges that come with integrating a fintech startup business into an already established organization?
I think the most significant one is cultural differences, is the way a corporate works with its structures and its governance processes and committees and budget and everything, works quite differently to the way a startup is impatient. It wants to get things going. It's prepared to do things over the weekend. That cultural difference is one of the big things, which means the corporate needs to be aware of its own challenges and have its own antibodies which resist this, and be able to deal with them, maybe through executives that know what they're able to sort of give some space, setting up budgets, having ways to work with fintechs, but also for the fintechs to have the patience as well, for the startup to have the grit and patience to work with corporates, and not just to sort of throw their hands up, but to say, we will take the time to work this contract and to get going.
Angus, from your experience with Signet, which is a venture of yours that invests and accelerates disruptive fintech businesses, what's your assessment of the skills pipeline or that fintech capability that we have access to on the continent?
Very strong. I've been over to Silicon Valley, London, other places, and I would really rate our technical capability and our business capability very highly. The challenge is about the time frames that it takes to get things done, and then to be able to get to sufficient scale to get good return on that investment.
Well, let's leave it there. Thank you both for having joined us in studio today. Of course, Dominique Collett is the head of AlphaCode, and Angus Brown is founder of Banking Acumen. Straight after the break, we take a look at one of the fintech success stories that has come out of Africa, Mama Money, and we speak to the company's co-founder about how he plans to extend the group's reach in Africa. Don't go anywhere.